Thank you for joining DealFlow today. We have a very honored to have two very prestigious, but also very friend of ours, Mr. Huang. He is from Commerce Capital, and also Juan. He is from BDO, a consultant, one of the biggest one here in Vietnam. He's going to start one here. So please introduce yourself a little bit more if I missed out a little bit.
No, you pretty much got most of it. So Peng Han from Commerce Capital. We are essentially a private equity firm that invests across Southeast Asia and Australia at the moment.
Very nice.
Yeah.
Very nice.
I'm Vaughn from BDO Consulting, Vietnam. So BDO is the 5th largest audit accounting advisory firm in the world. I'm currently leading the advisory practice here in Vietnam. We're doing mainly deal advisory, GRC type of engagement.
Very nice. Very nice. And so, what today's chat obviously is a little bit of wrap up of 2025. We're looking forward to 2026. So I want to get you guys expert advice on how the Asia market overall, right? Maybe you can tap on that a little bit because not only you're in Asia but also specifically Vietnam. So how do you feel about Vietnam in that way for Southeast Asia at the moment?
At the moment, I would say first half of the year because of the Trump tariff, most of these Southeast Asian countries are going through a turbulence.
Right.
Q4 this year, we're seeing an uptick in terms of deals,
Right.
either outbound or inbound.
Right.
So we still receive a lot of inquiries
Okay.
about potential investments into the country from investors from various countries,
Right.
from
Right.
Japan, South Korea, Chinese, from other Southeast Asian countries like Malaysia, Thais, Indonesians.
Right.
So we are still seeing quite a number of FDIs coming in.
Okay, so quite a bit of uptake in a way, right?
I think yes.
Let's touch on that a little bit of China plus one concept, right?
Okay.
Maybe you can touch on that and Juan, you can put your input in too because you are capital too, so you surely do invest and look in. So
Sure.
we'll have you continue on that on the China plus one.
Sure, no problem. Plus one, okay, the supply chain movement from China to Southeast Asia is definitely continuing. However, having said that, Vietnam is not the only contender in this race. So a lot of Chinese, they go to Vietnam, Thai, even Malaysia.
In Malaysia.
Malaysia has been doing very well, surprisingly, for the past 2 years. Yes, very well. Data centers and even all those high advanced electronics manufacturing, they all moved to Malaysia.
Oh, okay.
I think it's probably because of the overall package in Malaysia. They have the ecosystem in Penang,
Okay.
Butterworth,
Yeah.
and then
Semicon is coming back.
Semicon is there.
Japan.
Yeah.
Yes, and then the labor cost in Malaysia is slightly more higher than Vietnam, but it's very well educated. And then the infrastructures in Malaysia is actually quite good
Yeah.
in terms of airports, roads, highways.
Right.
It's quite well established in Malaysia.
Mhm.
So we do see quite a number of Chinese move to Malaysia.
Okay, so from your China plus one concept, the movement is going a little bit more in Malaysia. Right?
Yes.
But with that contrast to Vietnam, how would you play that out?
I think the Chinese will definitely still come back to Vietnam,
Yes,
only because of the tariff.
only because it's tariff.
Only because of the tariff. Because I do have a lot of Chinese clients
Okay.
that are moving their factories.
Oh,
I mean, part of their production to Vietnam, purely because of the tariff.
purely because it's tariff.
Yes.
So basically, they're not moving their whole operation
No.
just for that.
They are moving
like a
some
sub,
part
right?
of their production
Oh,
to this part of the world, to Vietnam,
Okay.
doing some very simple processing,
Oh, okay.
and then packaging, and then they just sell it to the US.
Sell to US. So when you say these client move, do they actually acquire land and purchase it, or they do typical BTS, RBF?
Okay.
What are some of the typical style?
Before COVID, most of the Chinese that moved to Vietnam, they would buy a piece of land to build their own factories.
Right.
Now, most of them just lease.
Lease.
Ready-built factory or ready-built warehouses. Some may do BTS, build-to-suits, but it's significantly reduced in size.
Size, yes.
So previously they could have bought like 10 hectares of land, so now it's probably 3 hectares.
Right. I also noticed that too.
Yep.
That there is that
That is a trend now with
yes,
Chinese.
Yes, it is a trend. With Chinese, you mentioned earlier, with Japanese, the same, pretty much. They do the
Japanese,
same thing.
based on my recent conversation with someone from Japan, seems like they are also leasing instead of buying land and build their own factories. So I think that could be a trend going forward.
So that means the FDI is still coming in,
It's still coming in
but in a different structure-wise for Vietnam.
different
Scales-wise
Yes.
as well, yes.
Yes.
Okay. What about Han? What do you have on that one now?
Look, I mean the FDI, Vietnam is still one of the highest growing GDPs in the world, right? No one can deny that fact. It's still very big money, big money FDI coming into here, very specific industries. But from where we are smaller investors. What we tend to focus a lot more on is housing at the moment. Right? And housing has a certain social element to it because in every country in the world, people are short of housing due to affordability.
Very true.
Right? Vietnam is a difficult one to crack because land prices are really expensive at the moment and the affordability is not quite there. Malaysia, however, is one of the most attractive markets to do that at the moment. In Malaysia, we are able to build and sell houses for under $60,000 per house. Right? That's what $1.5 billion or so.
Right.
So, but we're not talking about apartments. We're talking about landed, what we call villas here, with your own garden and 120 square meters built up.
I see.
Right? And we are building it more regional. We're targeting what we call the B40 category, the lowest category of income category in Malaysia. But that's achievable in that market. In Vietnam, we're not sure we can do that because there's just so much investment coming in. Most of the new build projects are $500,000 starting in the apartment blocks. Yeah, that is not what I view as affordable for many countries.
Right. So for you as a fund who directly invest in these projects or even develop these projects, what is your outlook in terms of ROI in a way that you're expecting from any project you undertake?
So at the moment, we are in two main sectors, right? We are in retirement living, which is the end of life spectrum, and we are at the, earlier spectrum where you starter houses, family houses, right? Things where you can't quite afford yet. Right. So returns on both are going to be a bit different. The retirement side is higher because we're talking about more affluent, higher income. The affordable component is more of there's a partly social element to it, right? But we developed a model which we're now speaking to a few pension funds about getting into. We're talking a roughly 8% unlevered IRR. Right, which is, is a pretty good return.
Still a double digit.
It's a very good return for a socially driven project, which is to get as many people into homes, onto the housing ladder as possible. And it becomes very much like a manufacturing process, very operational driven. And that's how we find it's easy to operate. You've got to control operations in order to deliver product. Right. Whereas for Vietnam, as a smaller player like ourselves, it's very difficult to control all those elements.
So with that said, what are some of the red flag or difficulty, I should say, that would prevent an investor like you to come into Vietnam with the same playbook?
Generally, and this is speaking very generally, which applies not just to Vietnam, to Malaysia, to Australia, to UK, to the US, right? The number one risk all of us face at the moment is political risk. Right? What do I mean by political risk? I mean change of leadership, restructuring of governments, introduction of new laws, introduction of new taxes, things that happen just overnight like that, right? Without consultation, and it's a real shock to the system.
Right. So for you as an investor yourself, that is one of the biggest hurdles.
Political instability is always a concern, right? If you're not able to forecast, you can't really invest.
That's true.
Right. Because to give you an example, in Australia, where we are invested at the moment, we've had a Labour government who has introduced a lot of taxes in recent years because they've overspent. Right? What has that resulted in? An exodus of capital into other states.
That's true. Yes.
Right. So when you're not able to forecast, capital either leaves or doesn't come in. Right. So I mean, the recent, restructuring of the Vietnamese government has paused a lot of FDI, which I'm sure you've experienced.
Yes.
Now, as that starts to gain more clarity, then you'll see that FDI start to improve again. Right. So as you look back in Malaysia, FDI has increased a lot. The base level has actually been pulled up because of initiatives put in place years ago. Right. I'm quite happy myself when I go back to Malaysia and visit and see, the amount of disposable income amongst the masses that has improved a lot.
So if we go a little bit back into history, because you're with Paul Kaplan, obviously,
Yep.
and you led the UK division, right?
Yep.
In terms of that aspect. Tell us a little bit about that. Have you used some of that strategy and applied that to your hometown, Malaysia?
Look, so a lot of what we did back then was we were moving international capital, right? Pretty much helping Asian capital invest into Western world countries, right? To a certain extent, we were translating culture, right? Are we able to replicate that today? It's a bit tougher because environment's very different. COVID was an absolute game changer.
Oh, it's a mess.
Right. Post-COVID, everyone started going inward looking. People were pulling capital, especially a lot of our Chinese investors were pulling capital out of all their global investments and reinvesting in China. We saw the Koreans do that for a period, but Korea is starting to come back out again. But at the same time, they've also experienced quite a lot of fraud while overseas. So they're a lot more careful these days.
Oh, okay.
Right. But what I'm talking about are purely the institutional investors. Vaughn's clients tend to be the actual businesses themselves rather than capital managers. Right. So that's the different outlook which we're talking about. Now, in terms of my experience there, right, we were investing in things like commercial real estate, in retail, in hospitality. We were invested across the equity space, mezzanine space. We did things from pure income generating assets all the way through to developments. So are we able to bring any of those strategies back to this part of the world? Yes, we are. There's many lessons we learned that we took from the US to apply to Europe. Into Europe, we'll take it back to Asia. Right? And that's why I said what I'm focused on a lot at the moment is housing. Right? Housing is an issue that is faced by the masses globally, affordability of housing. Right? And putting people into homes is a very lucrative business, but we're not talking crazy returns. Right? This is a sustainable long-term business because you are able to make acceptable returns.
Right.